7 stocks to buy right now in the stock market. As we continue the fallout from the banking crises with Silicon Valley Bank and Signature Bank, we have a lot of buying opportunities in the market right now, and things have generally been pretty bullish actually. Despite what a lot of people thought would happen, many stocks are going higher, especially tech stocks, and there are some buying opportunities in those bank stocks if you know where to look. And right now is the time to be greedy when others are fearful. So let's get right into it. If you're new to this channel, by the way, my name is Chris from StockDads. We are an education first community for stocks, options, crypto, and more. You can find us on social media as well at StockDads. And we are going to talk about 7 stocks that I would be considering buying. And I may be doing some buying in my own personal investment portfolio right now. Stock number 1 on this list is Bank of America, BAC. Many people obviously bank with Bank of America. It's one of the largest banks by assets in the entire country and in the entire world, frankly. And this is Warren Buffett's number 1 bank stock, number 2 stock in his overall portfolio. So this is a very, very good stock for the long term, in my opinion. Now, as of this recording, Bank of America is a $27 stock with a $215 billion market cap. This is a very profitable company, as most banks are when you don't have a bank run going on with your institution. I personally don't believe Bank of America is in any trouble. In fact, if you look at the data over the past week or so that came out, Bank of America has actually seen a net inflow of assets, not a loss of deposits that a lot of people are concerned about with smaller banks that happen, with Silicon Valley Bank and Signature Bank. And right now we're also seeing that a bit with First Republic. Bank of America pays a 3% dividend, and frankly, the lower the stock price, the higher that dividend gets, and you're getting a better opportunity in the long term to generate passive income for your investment portfolio. Most of Bank of America's deposits are FDIC insured, and I don't see people leaving big banks the same way that they might be leaving the smaller regional banks. These banks are too big to fail, and the federal government would never let them fail. We saw that in 08-09. Eventually, these banks all came back better, stronger. These banks have undergone a lot more stricter regulations. They are undergoing regular stress tests with the Federal Reserve. And ultimately, for the most part, I think that pretty much everyone out there, or at least 99% of people out there, believe that these banks are safe to put your money into. Stock number 2 is Morgan Stanley. This is more of an investment bank rather than a directly consumer-facing bank. Nevertheless, this is a bank that has seen a lot of negativity over the past couple of weeks. The stock has been down quite significantly, and I think that this is undeserved. If you look at Morgan Stanley's dividend history as well as EPS earnings history, it is very impressive. Morgan Stanley currently pays almost a 4% dividend here, and over the past 20 years, you can see that the dividend history, the growth has outperformed many stocks in the same sector as well as stocks in general. So over the past 20 years, it has a compound annual growth of 6. And over the past 5 years, you can see that the dividend growth has been over 20%. And they also have a big share buyback program as well. Also, when you look at the merger and acquisition landscape over the next 5 to 10 years, as opposed to the next 1 or 2 years, I think that it is very promising for their earnings. No one really wants to make a deal in this environment when it's a big bear market and valuations are coming down. It makes sense that as we get into a bull market, valuations start to go up as people take on more risk once again. Their investment services will go higher. Stock number 3, PERION. PERION Network is an ad technology company based in Israel. Right now, as of this recording, it is a $38 stock. I've been pushing for everyone to research this stock and decide to invest. I am personally invested in this one. It's my number 1 stock in my entire portfolio for good reason, right? For a long time, this has been extremely undervalued. Even today, it has a PE ratio of about 18, which is not bad in this environment when you do have strong revenue and earnings growth. Over the past several years now, PERION has had a compound annual growth for its revenue by over 30%, and its net income has increased by over 100%. every single year. You also have to consider that PERION is Microsoft's supply partner for ads on Microsoft Bing, which is the hottest thing recently because of its integration with ChatGPT. Now, as they continue to integrate ChatGPT and OpenAI is only going to improve ChatGPT over time, then I think more and more people are going to go to Microsoft Bing. And every single incremental increase in market share for Microsoft Bing is going to be more revenue share for PERION. So that is going to be tremendous opportunity there. And even without that, PERION has been absolutely killing it with its proprietary cookieless technology. This company also has an amazing balance sheet with over $430 million in cash and no debt at all. So it's a profitable, fast-growing company with a solid balance sheet and great future prospects. If you like these picks so far, by the way, make sure to check out the Stock Dads Discord. We offer trading alerts, education, mentorship, webinars, live sessions, and so much more. Be sure to check it out in the link in the description. We even have a promotion going on right now for March Madness, one of our biggest discounts ever. You don't want to miss it. It's a limited time only. Moving on to stock number 4 here is Meta stock. Meta has seen an unbelievable transformation over the past 6 to 12 months here. I mean, highs and lows and highs once again. So Mark Zuckerberg has dubbed this the year of efficiency, and investors love it. They spent a lot of money on the metaverse so far, tens of billions of dollars. They still have about $40 billion on their balance sheet, and they are right now aware that the market does not want them to burn an excessive amount of money forever. So thankfully, it's crazy. In this type of environment, layoffs are a bullish indicator, and Meta is firing off those indicators by firing a lot of people. So they fired about 10,000 people earlier. They're firing about another 7,000 to 10,000 people again. This is going to cut costs down dramatically. Now, even with everything going on with TikTok competition, with burning a lot of money trying to figure out the metaverse, optimizing Reels, monetizing WhatsApp, there's a lot of things going on with the business, but they're still, at the end of the day, generating over $20 billion in net income. So it's definitely way too early to say that Meta is finished, and I think the company will continue to grow again, especially as we have a better economy. So why not buy when it is low, and the business is probably going to turn around in the next 6-12 months. Number 5 is going to be Charles Schwab stock. A lot of people have lumped Charles Schwab into the regional bank category because Charles Schwab technically does have a lot of bonds on its balance sheet, which are at a loss if you value it at the market value today, because they are paying interest rates at about 1.5%. So the value of bonds go down as the rates on bonds go higher. So unfortunately, if they were to sell those positions, they would take a big loss. That's what happens to some of those institutions that went down. That's what a lot of people think could happen to this stock. But I think it's so misplaced, right? Misguided here, because Charles Schwab is not like a regional bank. Charles Schwab has over $7 trillion in client assets on its books. And if you look at the liquidity that it has over $100 billion that it could draw upon. I mean, they have so much liquidity right now that the bank is saying that if everyone were to withdraw their money, right, on the banking side of their business, they would still be perfectly fine. They would still be operational, and they would be able to essentially absorb that impact and continue going about their everyday lives. The CEO has also gone ahead and bought 50,000 shares. A lot of other insiders have bought shares over the past couple of weeks. I think up to the tune of about $5 million worth of shares. So if insiders are buying, I'm definitely very interested in buying as well. I've gone ahead and built a large position in Charles Schwab. I don't think that there's a big issue here if you look at the financial results of this company as well. Q4 2022, they just produced record revenue and record net income. As people continue to see the stock struggle, they try to equate that with the actual business, which is a big mistake. I don't think that anything is going wrong with the business. The CEO has said that. And in fact, if you look at the data here as well, Charles Schwab has increased in deposits over the past couple of weeks. They've seen net asset inflows over the past couple of weeks. So the business is doing perfectly fine. The stock price is at the lowest it's been in a couple of years. So why not buy? Stock number 6 is NVIDIA stock. This is one of the premier semiconductor companies, over a $600 billion market cap right now. Another one of my favorite stocks to buy in my investment portfolio today. It's been doing amazing. I'm so happy with it. And the story with NVIDIA is that its chips right now are being used to power the artificial intelligence wave. Now, some people might say that this is super hyped up right now, almost to a fault, but I think you can see the real world transformations that we're experiencing right now with AI being integrated into pretty much everything from enterprise applications to consumer facing products like Microsoft Bing. Salesforce has been integrating ChatGPT into its systems, autonomous driving even, which NVIDIA has a growing segment in. They also have a segment in gaming. But on that note with artificial intelligence, right? ChatGPT recently came out with GPT-4, and that's supposed to be 1,000,000 times computing power compared to version 3. And all these people right now developing artificial intelligence, chat bots, all kinds of applications, it's only going to scale higher and higher and higher, become more sophisticated and more complex. Generative images as well. They're going to be using these chips to train and power these applications. So NVIDIA is pretty much the premier company out there with the most advanced technology right now for that application. And the business is only going to continue to thrive. I also want to point out that NVIDIA has been the best performing S&P 500 stock out there so far this year. And a lot of people might have the inclination to go ahead and sell a stock that is doing really, really well. It's one of the best winners so far this year. It's gone up to a point where maybe you should just sell out. But that's often a psychological fallacy that does not work for you. Winners win for a reason. There are good things happening with this company, and investors may continue to keep buying that stock. And that's just going to keep the price high. You've seen that with Tesla as well. If you sell NVIDIA, if you sell a winner in general, you might want to put that money into a stock that is down at 52-week lows. It's a losing stock. You think it's going to bounce back, right? Buy low, sell high. But there's probably a reason why that loser is losing. And there are definitely a lot more stocks out there that are losing than winning from just my personal point of view. So you might get into a stock that's just going to continue losing when you should just stay into a stock that is thriving. Something to consider. With that being said, stock number 7 here is Manchester United stock. I'm personally a Liverpool fan in the English Premier League. These are soccer for American fans or football for everyone else in the world. This is the team that, and I hate saying this, but this is the team that's the most successful in England in history. Now this stock or this company is currently undergoing a buyout process. They're trying to sell out to someone else and exchange hands. Shareholders, if this is going to be a complete buyout of the company, are going to get bought out at a certain price. Manchester United here is currently at about $23 per share, about a $4 billion valuation, maybe a bit lower as of today. It was down a bit when I'm recording this. It was down about 8%, but the current asking price for Manchester United stock is about £6 billion. The exchange rate right now for pounds to US dollars is about 1 to 1.2, right? So that's about 20% higher. So really you're looking at about possibly at the upper end of this asking price, 7 billion US dollars. The stock is currently trading about, as I said, right, 3.8 billion USD, 4 billion USD. So that's a huge upside. The problem here, so to speak, is that maybe the owners, the Glazers, might not actually sell out. They're kind of just feeling, all the buyers out there in the market. Some people are offering to buy 100% of the company. Some people may only want to buy a portion of the company. There was a lot of concern that it was not going to go anywhere at one point. But over the past couple of days especially, it looks like the bids are going to get higher and higher, and there are more bidders than previously expected. This is essentially buyout arbitrage, right? I believe that the price will go higher than the market is currently reflecting based off of the buyout price. And I'm thinking that the probability that this deal will go through is pretty high. There's always the chance that it might not go through. So if you don't want to quote unquote gamble like that, or do a short-term trade like this pick is not for you. So having said that, ladies and gentlemen, that is my 7 stocks to buy right now. Depending on your own investment preferences, the makeup of your portfolio, and your risk tolerance, make sure to do what is best for you. This is not financial advice, but just personally what I am doing. Once again, if you want to follow all of my moves as well as my team of analysts and educators, make sure to check out the StockDads Discord. Check out the link in the description and snag that discount while you can. Good luck in the stock market, and I'll see you in the next video.